Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go over a lot of Twitter information that I've been looking at, kind of just going over recent news. And wanted to compare some charts. I saw a cool little chart from Jesse Livermore and what he had the widening mouth and then a big run afterwards. I'm going to compare that to the current markets of uranium and also oil, the energy sector in general. So we'll go over some stuff here. I want to call you, these charts. I think they're pretty cool. I like comparing history with maybe patterns today. The patterns repeat because it's just herd mentality. And I'm going to give you a little bit of information on what's going on with some of the other maybe tech companies and oil companies and stuff like that to show you that the rotation is happening. So let's dive in. I've got the ARK. That's the ARKK fund versus the unprofitable tech, the NASDAQ bubble of 98 through 2002. And you can see that the run-up, the red being the NASDAQ, the blue being the ARKK fund, very similar in everything. The run-up, the returns, the pullbacks, and now the ARK fund is basically following the NASDAQ bubble. And I would suspect that that's going to continue with increasing interest rates. Growth stocks do not like that. So Cathie Wood, I mean, she had her time in the sun, and maybe she'll have it again when the housing starts and the housing market ceases to go up and we go into a disinflationary recovery phase of real estate, period. More information. Facebook shares plunge more than 20% on weak earnings. Forecast miss. Spotify also stock plunges in middling user growth projections. Yeah, all this stuff comes out when you're in an expansion phase of real estate. They're going to get hit. Now their earnings are going to get hit pretty bad. Now I saw this. This was posted on Twitter as well. It says, buy energy with reckless abandon. Analysts bullish on Canadian energy. Short of a breakdown in capital discipline or an unexpected collapse in commodity prices, investors can count on significant capital returns through a combination of share buybacks, dividends, and special dividends. That's Justin Bouchard from Desjardins, however you say it. Looks like he's pretty bullish. He's probably as bullish as I am on the oil, uranium, natural gas, anything with energy in it. Another person posted this, was the gold to copper ratio. We went from 70 all the way to early 80s in a very large gold outperforming copper. Now, I was looking at this, and remember, this is gold outperforming copper. We've got a shoulder, potential head, and shoulder that was developing in the gold to copper ratio. And maybe this thing will break to the upside, signaling a very large inflationary period that is coming. I think that this gold to copper ratio and the way that this chart looks like matches very well with a buy energy with reckless abandon. Energy, I think, is going to transfer all of this money into consumer price index numbers. And I think perhaps people will run to gold for various reasons. We are at peak gold supply, I think. And with inflation running in the system, that's usually when gold does very well. It does a reaccounting for all the money in the system. Now, here's Livermore's speculative chart. I'm going to back out just a little bit and try to get this all into one picture here. So what I have on the left is Livermore's speculative chart. It's the all-important action of stock A. This is an accumulation cylinder with widening mouth. Now, we have a little bit of a descending, a contracting mouth. This isn't a widening mouth. And hopefully it works the same thing, but it's got 1, 2, 3, 4, 5, 6, 7, this kind of wave that comes through, and then a big old blow-off move. We've got 1, 2, 3, 4, 5, 6, 7. So looking at this is on the right-hand side is XOP. It's an oil ETF of exploration and production companies. The accumulation cylinder with widening mouth here is the same, or is very similar, with the same amount of movements and patterns as the XOP ETF, which is the oil and gas exploration companies. I could pull up SM Energy, CDEV. They all have very similar 1, 2, 3, 4, 5, 6, 7 patterns before looks like a very large move. So we could be seeing a very large move coming basically now. It's possible. I'm not saying it. Anything I'm saying is just an opinion. It's not 100%. I'm just trying to find things where they correlate so we can see potentially maybe it could happen. I did the same thing with the uranium. URNM is the ETF I used. And again, we've got the 1, 2, 3, 4, 5, 6, 7 widening mouth. We have a slight widening mouth here, not as much as what he has. And we've got a 1, 2, 3, 4, 5, 6, 7, and we're putting in the bottom of number 7. Well, we'll see what happens here, guys. We'll see. And maybe I could draw this a little bit different too, from the bottoms of here instead of this contact point where it would come out a little bit more. And it would be a widening, an accumulation cylinder with widening mouth. So we've got uranium right there ready to potentially take off at any point. And remember, this is kind of a longer term view. It may take some months before the big moves come. We've got here, this is from North Star. This is the natural gas fund. And he's got the arc going here and a breakout of the not descending wedge, a declining trend line. We broke that. We've got an early breakout line here, and then a final breakout line here. Basically, it pivots on this high here, and then a potential move to the upside that's quite substantial. I agree with natural gas being in a huge bull market. Same with oil. We'll see what happens. We've got here Charlie Balillo. He says there are now 4.6 million more job openings than unemployed people in America. That's a new record. That's crazy to think about. We have 4.6 million more job openings than unemployed people. That's a huge. I look at that as like a ratio. I mean, I don't know how we're going to fill all those jobs if there's. I mean, look at the history here, guys. We've always been, kind of negative, and we're way up here in the positive range. And I think that has to deal with the demographics. The demographics of all this. So we're going to see wages go up quite a bit, I would think. Looking on the left-hand side here, it says impossible. Here's the chart that proves it. And they were talking about the housing market. This is the mortgage debt service payments as a percent of disposable personal income. And it's just declining all the way in 2020. And obviously this is going to come up in 2021 and 2022 for the mortgage debt service payments. But everyone's refinancing and lowering their payments with lower interest rates. I've got another thing. It says wave of millennials entering home buying age, leaving parents home, should create strong demand for housing. This is the annual change in number of U.S. residents aged 30 to 39. The average first-time homebuyer age is about 34, 35. So they took a perfect range there. This is the population increase, the demographic that's coming. And it's going to last all the way out till maybe even 2030 or so. But this says there will be an estimated increase of 7.9 million people aged 30 to 39 from 2010 to 2030. So it's a very large increase versus what we've had in the early 2000s. And this was the last bull market, commodity bull market. This is what's coming. And this is going to support higher inflation rates, in my opinion, because we are so underbuilt. And we've got this demographic that's coming that is much larger. It says this is the share of young adults living with parents, which is very, very high. It's at probably an all-time high that's ready to come back down, where they're going to move out. They're either going to be renters or buyers. And this I think is going to decline quite a bit. as they try to move out and buy homes of their own or rent. Either way, it's demand for more housing units. Coming back here, Nick Estrada had posted, baby boomers get a lot of attention for population, but the combined Gen X, Millennial, and Gen Z population will lead to a massive expansion of housing. It's demographic driven, right at the same time as a large deficit in new home construction. I agree. And he has some information there. It says older Americans are living longer and aging in place, reducing housing turnover, supply for first-time buyers. So people are also living longer. So I know I hear statistics about baby boomers passing away, but they're also living longer and they're not putting their homes for sale because they're living longer. So it says historical home ownership rates for households aged 67 to 85. It says the previous generation, people born before 1930, how the decline of this is your age and this is the percent here, the decline because they died earlier versus people born in 31 to 41, which they're living much, much longer lives. Nearly 1.1 million more homes would have to come to market by 2018 if those born between 31 and 41 had similar life expectancy and home use as previous cohorts. So that's what I've got for the information. I thought that was pretty cool on Twitter. I do think this gold to copper ratio, I like ratios, guys. I'm shoulder, head, shoulder. It very well could be. And then this break here, if we get that break, my Lord, is that going to be a big boy move? But that's what I've got for today. Hopefully you guys enjoyed the information. I'm a big energy bull. The way that I am playing this is I like energy quite a bit. Oil, natural gas, uranium, anything with energy related. You could probably play the energy service companies as well. I like physical metals because the cost curves are going to go up under a highly inflationary environment with energy prices going up. So I think metals are a low risk bet, sure way, one of the surest ways to capture the gains in the moves, especially metals like silver and platinum that have a high utility to society and a very low inventory number. Gold, everything's above ground and it's not used as much as an industrial metal, but silver is the number 2 commodity and platinum is also used in a whole bunch of things for various reasons, for various things. So that's what I've got for today. If you guys like the content, give me a thumbs up, subscribe to the channel if you haven't already, and thank you for listening. This is Finding Value.